we're going to be testing, the audio. See if it actually works, because I tried to do this the other day to record what I'm speaking about, but
mate, I need new headphones.
Right. So when we trade the euro against the dollar, what does that mean?
Means that we're exchanging how much the currency has changed in the time.
Okay. So a lot of people that trade, right? They just trade. Let's scaring at all these lines quick. Okay. Right. So when a lot of people trade, for example, the euro against the dollar, right?
Yeah.
They just blindly trade one pair and go, yeah, it's a buy, this is a sell. But they don't actually add logic to their trades. So a lot of people go, okay, I'm trading EU, but they don't actually know how strong the dollar is at the time of trading. So what we do is, and I'll put this up here because the first step would be to see the dollar first. So anything that you notice between these two charts, this is the euro against the dollar, and this is the whole dollar.
It's reversed.
It's reversed. So when the dollar is showing bearish, the euro against the dollar is showing bullish.
Because it's flipped.
Because when the dollar is weak, what is the euro against the dollar?
Wait.
When the dollar...
Stronger.
Exactly. When the dollar is stronger... Let's find an example. That's another weak dollar. Another weak dollar. God, I don't think there has been a fucking strong dollar for so long. Okay, we'll do this on Tuesday. This is literally what I traded. This is literally one of my examples. Okay, so when we have a bullish dollar, meaning it's strong, we have a bearish, anything against the dollar, right? So the way you trade needs to, and this isn't a personal thing, this is literally what I've been through and had to realise. I've had to realise I can't be blindly trading Euro USD without knowing how strong the dollar is. So the first step you do is see, well, I don't know if you've learnt this, but open, high, low, close. Have you learnt that or not?
I can't remember that.
I'll do a brief example now. So you see this daily candle, yeah? Every single daily candle has an open, a high, a low, then a close. Open, high, low, close. Open, high, low, close. So it's literally been in front of us the whole time. Look, open, high, low, close. This is how candles print, yeah? Now, do you know what prices fractal means? So it means whatever happens on the daily time frame, happens on the 4-hour time frame, happens on the 1-hour time frame, happens on the 5-minute time. Every bit of price is all linked together. So whatever happens on this time frame also can happen on another time frame, because all time frames are showing you different perspectives of, you know, the time candles, but every single candle, like if I go like this, right, obviously this is a daily candle.
Yep.
And just zoom into this one. Without looking at the time frame, this candle could also be like this candle or this candle. You would never be able to tell the difference. So we know if it's going to be bearish, we're going to have an open, high, low, close. If we're bullish, we have open, low, high, close. So that's a very brief example, but a lot of people know what I mean there.
Okay.
So what do you think true day open means?
I've heard it. I forgot it.
What have I just explained?
It's when.
So pretend this. Well, realistically, this bit of price action will become a daily candle, right?
Okay.
So you've got the open, and it's a bearish candle. So we had an open, a high, low, and then it will close around the open, right? Right here, it's a bit of a rangy one, because price is currently floating above open, which means this is a wick. This is where current price is. So it's a Monday.
That's all a wick.
It's Monday rained. But if you look at like Friday, we've got the open, high, low, close, right? We then look on the daily time frame. What can we see? Open, high, low, close. So knowing this, right, and it even works in ranging conditions because we use kill zones. We don't trade every single thing. This is London session, right? So this is the dollar, okay? Open, what does it do during London session? Open, does it move up or down first?
It goes up.
So open high. So what can we expect next?
Down.
Yeah, so open high, low, close, right?
Okay.
So if we know the dollar has made a high above the open, anything against the dollar is going to be what?
Below it.
Exactly.
Against it.
So it's going to be inversed, right? So we can then look at SMTs and things like that. So when dollar makes high of day, we can see on the right, Euro USD makes low of day, right?
Yeah.
So is that not a high confluence trade? Because we go, okay, dollar is going to be weak today, which means the euro is going to be strong against it. So the only thing that makes sense to do is to long. Because if the dollar's going to be bearish, Euro USD ain't going to be bearish, it's going to be bullish because the dollar's weakened. Now this next thing might confuse you a little bit, but it'll be good for the recording if you haven't seen it already.
Okay.
When you think of Euro GBP, a lot of people just think of that as another chart to trade, right? What have we realised trading is? What are we doing when we're looking at the chart that says euro against the pound?
Try again.
So when we look at Euro GBP, what is it telling us?
Telling us it's a euro against the pound.
So what can we use? How can we use that?
How can we use that?
How
Because
can
then
we
we can
use Euro GBP to give us a trade? You might not, you probably won't know, but if you do, then fairs.
we can see if it's what's stronger.
Think of this, right? Think of step.
You can see if it's stronger than the other.
Step one is dollar weak or strong. Yeah.
Yeah.
Step 2, bear in mind the pairs that we're going to trade, right?
Okay.
Is either going to be EUR/USD or what? That's the two
GBP/USD.
major pairs, right? So step 1, is dollar going to be weak or strong? What we've identified is dollar's made an open high, which means the rest of the day will probably be bearish. So we can put this as weak. Reason being open high, expecting open high low close, right?
Okay.
Step 2, right? After we found out the dollar is going to be bearish, we need to know what pair we're going to trade. EU or GU. How can we know which is going to be the best pair to trade if the dollar's weak?
Because depending on what's stronger out of GBP or Euro.
Yeah. So you see this chart here, yeah?
Yeah.
Euro against the pound.
Yeah. Whatever's stronger.
This is going to tell us, with the same concepts of open, high, low, close, what pair is going to be the best to trade against, right?
Okay.
So if we look at the same timings, right? Because everything that happens on here, this isn't exactly correlated with the dollar because it's the euro against the pound. This has nothing to do, but we'll use the same timings, right? So when the dollar makes the high of the day, euro GBP is sort of just floating, right?
Doing that.
We then get low of day.
Okay.
At 3:30. The same time the dollar's retracing. So if we know that euro GBP is open low, what can we then expect? Well, it's in front of us. Open low, high, close, right? So when we're here and we've seen this saying that it's going to be a weekday, this telling us that euro against the pound is going to be bullish, right? What does that mean? Which pair is stronger, euro or the pound, if it's bullish?
Pound.
No. So the euro is traded against the pound, which means
and the euro is stronger.
The euro is going to be stronger for the day. So if we're going to buy, right, so we know step 1, dollar is going to be weak, yeah?
Okay.
Dollar's going to be weak. Euro is stronger than the pound. So surely, right, if we was to long, long equals strong / weak. Short equals weak / strong USD. So when the dollar is going to be weak for the day, we can come here and say weak USD, long, strong. So we've already identified which is the strongest pair for EU or euro or the pound. Which is it?
The euro.
Euro is stronger than the pound. So would we rather trade the weak pound against the weak dollar and buy, or would we rather buy a strong euro against a weak dollar?
Strong euro against the weak dollar.
Perfect.
Because we know that the dollar's weaker than
if we
GBP.
now go on to GBP USD, right, and put this as Euro USD, if you took a trade on Euro USD, you'd have had 30 pips above open, right?
Yeah.
If you was in GBP USD, look how choppy it is. But regardless though, you'd have had... Why is it not working? That's not right.
Better chance we're against the US.
You'd have had about 20, but what chart would you rather trade?
Euro USD.
What one looks cleaner? There we go, price range. So you can put it exactly on here.
One that's clean is
Which one looks way cleaner?
GBP USD.
Really?
What do you mean by cleaner? Because like.
So when EU made low and just kept on going high, GU made low, came all the way back down here. So you see here, right, at 8.30, look how low it was compared to EU.
It's lower than EU.
Exactly, which means what?
That
the euro is still stronger than the dollar, and because the pound is weaker than the euro, the best trade to take was on the euro against the dollar, because we knew that euro is going to be stronger than the pound for the whole day.
So you can basically take 3 different...
So you need DXY to tell you, is XXX going to be against, right? DXY means weak equals long for anything against the US dollar, right? And if the DXY is strong, you want to short anything against the dollar.
Okay.
So you want to check the DXY, see what it's going to be. If it's weak, you want to long it. If it's strong, you want to short it. Then you can see, okay, which is going to be the best one to trade, which is the stronger pair against euro or the pound. If euro's the stronger pair in a long, then you'd want to trade euro against the US dollar. If euro is the stronger pair in a short, you'd want to sell the weaker pair against the strong dollar. So you need 3 charts. You need the pound, the euro, so you can have DXY, euro GBP, and that third chart is whatever one is stronger or weaker for here with your bias. So you can't become a pattern trader with trading, because I try to tell everyone, strategy is irrelevant. Strategy does not matter. I could literally, knowing what I've taught you today,
information gathering.
DXY, I could see it's going to be a bearish DXY. I could enter at anything at all. I could enter as long as it matched up with the dollar bias. So when the dollar swept, this is, a turtle soup strategy. When the dollar failed to sweep this high, let's turn that off. But this low got swept, you see? So this time was 225, right? You're looking at the bottom.
Okay.
225. This high was made, which means this low was made, yeah?
Yeah.
At 310, DXY didn't sweep it, and the euro did. So if we just had a SMT turtle soup strategy, there would be our entry. Right there. You could buy any fair value gap that you see after analysing the DXY. You could buy this fair value gap, you could buy this fair value gap as long as it's below the open. Now I want to show you the daily candles for the euro against the pound. They both look the same because it was a Monday, but which one moved more from the open?
The GBP USD.
Open. Yeah.
Pound.
This is the open. Which one had a higher wick on a bullish
Pound.
day? Are you sure?
Yeah.
Are you sure?
Which one had a higher wick? Okay.
So bear in mind it's showing as a bearish candle because of it was a Monday and it was ranging. However, we've established the move was during London.
Okay.
So that's the wrong one. It's simple. Which one had the bigger wick? Top wick. 15 points. And this is why I don't trade Monday, because it is not as clean as a Tuesday market profile or a Wednesday market profile. So the top wick on the daily of the pound dollar was 5 pips. Top wick on the euro against the dollar was 15. Reason being, the euro was stronger than the pound, and even on a rangy day, still could have got about 30 pips from the market from this move here.
Okay.
38. Well, depends where you entered, but if you'd have got complete low, 38 pips there. I mean, a lot of the entries probably would have been from either here or this exact touch. For the people that trade model ones like I teach. So this trade would have been, well, even if you just caught there 3 pips, if you really caught high of day, which, you know, you're never going to fully know unless you know. But
Yeah.
5.8 RR, if you look at the same entry on GU, would have been here, and there would have been your entry, and you would have caught, if you got a high day, a 4R. So even on a rangy day, you could have made about 6R compared to a 4R. And this trade had barely any drawdown, none at all. It just went straight up. With this one, it would have probably stopped you out of break even, unless you'd already hit TP wherever. But did any of that make sense?
Yeah, you're using 3 different.
So
Okay.
when I was saying, like, watching you backtest and seeing you was just fixated on Euro USD, it was like, how are you buying the euro against the dollar if you don't even know how strong the dollar is?
Yeah.
You know? But hopefully all that audio recorded, because it is a good vid. I'll finish there.